Welcome back to the floor of the CME Group here in Chicago. Friday, January 6th. More importantly, it's Wolfman's birthday. Big happy birthday to Wolfman here. I'm Killer. You can get me at the Killer. And I got the Wolfman here. Doesn't need any introduction, folks. Happy birthday, bud.
Thank you very much. Thank you.
You know, we're seeing a wild day today, but not as much volatility as the market participants were actually looking for. Can you break down this non-farm payrolls number for us?
Yeah, you know, the non-farm payroll headline number came out a little bit lower than expected. It looked like there were a lot of jobs being created and stuff like that, but the real important thing to look at is the labor force participation rate. When Obama came into office, that labor force participation rate was 66%. Right now it's at 64%. So if we looked at as many people that were looking for jobs back then, the unemployment rate would be upwards of 11.5%.
Wow, and I think that to drill down on that, Wolfman, I think everyone talks about these numbers, these statistics, and the statistics, they're not truly representing the exact pulse of the economy here. So traders are really struggling. That's why I think you're seeing the markets kind of mixed today. We saw that original gyration. They took the S&P, they took the Dow up 100 points, and now they're kind of flat right now, and they've actually come in and grabbed these treasuries. So drill down here, how do we get a better pulse on what the actual numbers are?
Well, you know, you do have to dig deep, because I even went to the BLS.gov and you couldn't find the information there very easily. So you have to actually do your research, your homework and stuff like that, find out this stuff, because that's what's really important. Like you said, the equities really blasted off. Treasuries went down to, I know your killer level, I saw that. That's one of my levels. Mine was a little bit higher than that, but yours right there at 28, 141.28, I believe. So, and then we kind of bounced off that number, and you know, the treasuries, everybody started really seeing what the true number was, did their own research, found out that labor force participation rate, 50,000 people fell out of the market again this year, or this month.
Right,
so,
and I was talking to Sell Puts, you know, Evan McDaniel, and I think there is kind of a sneaky potential QE3 bid in the market, because nonetheless, folks, we're seeing the euro currency, you know, come down. We saw that US dollar take out the January 2011 high, so it's really making some moves here in these currencies as well as the dollar. Thus, you know, are we going to see a move down the S&P, or is this QE3 coming down the pipe?
Well, the QE3 is definitely always in the works. I mean, you know, Bernanke just loves to print money, and I don't think he's afraid to do it. You know, as long as everybody else, you know, like if the yen is going to get devalued, we're going to probably devalue ours too, and try to throw these banks some more cash so that they can trade. Not that I think that that's the right thing to do. They say that they're going to print the cash to get them to loan it out to you and I, but like we were talking on our way up here, why would a bank loan to you or me and take the risk at 3% when they can get flush with cash and start trading it in the market? We need Glass-Steagall back, as far as I can tell.
It's amazing. It really is. And I think a lot of people are anticipating next week some volatility as another shoe drops in Europe. So, folks, from the floor of the CME Group, Wolfman's birthday, also Joe Kernan's birthday. But make sure you give Wolfman a happy birthday shout out at Wolfman's blog. One other thing you have to remember during this birthday, to be the hammer,
not the nail. Take that.
Baby girl, I think we need to sit and talk, playing with my money, paper, scissors, rock, going up my heart and stick.